This video is sponsored by Wallmine. It is this super cool tool that I've been using for researching stocks. Go check it out for completely free by using the link down in the description below. What is going on, you guys, and welcome back to another video on the channel. If it is your first time here, my name is Brandon. In today's video, we're testing out a new concept, a new video series, I guess we'll call it. I have no idea what the title is going to be, but we're going to be highlighting 2 stocks to buy right now, or 2 stocks to buy in June, or whatever the title ends up being. If you want to skip ahead, by the way, to see the stock picks, if you just want to get in and get out, I'll put a little time stamp here on the screen for you guys if you're one of those people. Reason behind this new series, and I'm way open to suggestions and feedback. You guys know that we're based here out of Vancouver, BC in Canada. And I know you guys love the Canadian content, always asking for Canadian stocks to buy and whatnot. So what we're going to be doing is we're going to be highlighting one Canadian stock and complement that with one US stock or one stock outside of Canada. Because I mean, if you invest anything like myself, and this doesn't mean you have to invest this way, but the way I like to construct my portfolio is you have an aspect for Canada, and then you also have a healthy portion outside, abroad. And in many cases, it's the States, the US. That's kind of the market where we kind of choose. This is the best market out there, in my opinion. So why limit ourselves to just talking about Canadian stocks? Why do just US stocks? We'll do one of each, and hopefully that keeps everybody happy. I'd love to hear your opinions and feedback on that, but we'll give this a try. I'll target a video like this hopefully every month, and I'll try my best to stick to that. I will stick to that. If you guys enjoy it, give a thumbs up if you like this concept. Give a thumbs up if you like the video. And of course, as always, you can check out our Investing Academy. If you're a Canadian here that does want help getting started, let me know about that. Give me some feedback, some comments down below. But with that said, let's jump right on into the video. The first stock that we'll be covering today is our Canadian option. As I'm sure you can tell, it is the company Canadian Tire. The ticker that we'd be looking at for this one is CTC.A.TO. We can touch on that a little bit later. But this, I know right off the bat, is going to be a big Canadian favorite. We get comments from time to time asking about Canadian Tire. I know, just being a Canadian, like I was at Canadian Tire the other day, major lineup, all spaced out, of course, with the social distancing. I got myself a little barbecue, and that's what I've been doing these days, just barbecuing up. But it reminded me just how impactful this company is when you look at its impact in Canada. I actually found this out when digging in deeper. Company IPO'd, they've been out publicly traded since 1944. This goes back a little bit before I was born, and I even think of someone like my dad, who's, I mean, to me, he's pretty old. 1962 he was born. This company was publicly traded for 20 years before that. So a very, very long history and track record in terms of stock performance. Actually been a very, very nice performer over time. By the way, we're looking today at about a 4.8% dividend yield. And Canadian Tire, we all know the brand quite well. Their own, I don't even know what you'd call it, tools and housework. They do all sorts of things. They also bought back in 2011, a lot of people don't know this, but they bought a company called FGL Sports. This was the parent company of Sports Check, and they paid $771 million for this. So I definitely do some shopping at Sports Check from time to time. Marc's Work Warehouse, another company under their umbrella. They merged with this company. They acquired it back in 2002. And more of a recent one, in 2018, acquired the company Helly Hansen. If you're a snowboarder or a skier, I'm sure you're familiar with that brand. So a decent little portfolio, a nice little umbrella here. And this is something that a lot of people don't know, right? You're not just getting Canadian Tire when you invest in this stock. And what I think is cool about the company Canadian Tire is, you know, they are a traditional retailer, don't get me wrong, but at the same token, or on the same token, at the same sense, I don't even know what I'm trying to say here. At the same time, they do have some aspects of their business that make them unique. Take, for example, their car service, right? There's the maintenance you've driven by all the time. Maybe you go there and get your car service yourself. That aspect of their business, where you can charge for the physical labor, like the actual hands-on work, those are typically very, very high margin areas of business. So the money they pull in from there, a lot of that just goes straight through to the bottom line. Very, very profitable aspect of their business, which does kind of set them aside. They also have their Triangle MasterCard, their credit card here. In fact, they have actually over 2 million Canadians that use them. So some exposure into the financial sector, which as well sets them aside. And one thing that I find really interesting is that Canadian Tire is actually a play on real estate. So they have a REIT, a real estate investment trust, and they actually own a lot of the land. It kind of reminds me of the McDonald's story, if you follow McDonald's at all, where they own the actual land and they lease the land to the different franchisees. So they actually have money coming in like rent, like a lease payment or a rent payment coming in. I'm reading here over 27 million square feet of leasable area that this company owns. To not dive too deep into the numbers here, just given how skewed things are going to be, we will just take a quick look at their Q1 earnings. This was just a week ago. A couple of things to highlight. This is one that I found kind of funny. Canadian Tire Retail delivered 0.7% comparable store comp sales versus Q1 of last year. So this marks the 24th consecutive quarter of positive comp sales growth. So they inched it out by 0.7% to kind of keep the streak going, but 24 consecutive quarters of growth, good number there. I'm sure we won't be able to expect that for the next quarter. With the whole COVID situation, these are just a couple notes they had here, how they're handling it. Pausing of share repurchase plans, which makes total sense. They'll be deferring some of their capital expenditures. So some of the big projects, plans they had for investing capital into the business, with the exception of some key areas like e-commerce. And this is something that I think is a very, very wise move on their point. We can actually see in the previous quarter, e-commerce sales grew by 44%. And that is something that I think is very, very important for a company like Canadian Tire. I draw the comparable to, Walmart is another big traditional retailer now who's seeing a lot of good growth in their e-commerce division or their e-commerce space. And that, I think, it goes without saying that I think a lot. It goes without saying that this is going to be a big important area for these companies. The online sales, the pickup at curb or the curbside pickup, I think these are all areas that companies really need to be focusing on going forward. And when you look at the track record, a very, very long track record of Canadian Tire, they've been a very, very resilient company. And I do think, hey, they'll make the necessary adjustments to kind of adapt to where we are today. The 44% growth, in my opinion, is a very strong example of that. Of course, with many companies and especially retailers, there's still a lot that we don't know as to how things are going to play out with our economy picking back up, whether they're going to be able to function even close to where they were before. That is just one of the many risks and many uncertainties that comes with the time like we're in right now. But with all that said, Canadian Tire, I think, is a really cool stock to look into. I know it is a favorite here in Canada. The shares are trading for about $95 Canadian. And like I said, you are pulling in the nice dividend above 4%. So Canadian Tire is the first Canadian stock. Well, it's the Canadian stock that we're going to be covering in today's video. Moving on to our second stock for today's video, our non-Canadian stock. And this one's actually a unique one in the sense that it's a US stock, but they are headquartered. The company itself is based out of Europe, the Netherlands, United Kingdom, I believe it is. It's the company Unilever, ticker UL. You'll also see the ticker UN. So another tricky ticker one. But UL is probably the one that I'd be looking at. Unilever is, if you're not familiar, a massive, massive consumer staples company. So very much like a Procter & Gamble, you know their products quite well. The brand list could go on, but some of the ones they do own, Axe, Dove, Lipton, the teas and the chicken noodle soup, Q-Tips is one, Ben & Jerry's, I know some of us will love that. That is just really to name a few of their massive, massive portfolio. This is one of the top players in terms of everyday goods, foods, just the type of things that we kind of need year round. Very comparable to a Procter & Gamble. And like most consumer staple companies, these are the types of stocks that you can kind of just hold in your portfolio, kind of like a boring core position. The demand for these products, especially in a time like now, I read online somewhere, people aren't going to be going out and buying that new sports car. They're not going to be going out on that fancy vacation. But even if for social distancing, you still need to buy deodorant. At least most people would, or I hope most people would. There just is really not a fall off for the demand for these products. And when you look at how big this company is, they're in over 190 companies, I believe it is. Their products, on average, about 2.5 billion people across the globe use their products every single day. So massive, massive there. And of those 190 countries, as you can see up on the screen, a very good chunk of those, in fact, about 60%, actually exposed to the emerging markets. So developing, fast-growing economies. This does provide kind of a unique angle on this company. They really are spread all over the place, and they're able to do that while maintaining, I saw here, their credit rating. So these are the two credit agencies or credit rating agencies. A rating across the board, an A1, A+, very stable outlook, which goes to show, I mean, especially during a time like now, when we will see companies that are going to be facing bankruptcies. We're going to be seeing companies that are very, very highly leveraged, companies that are in a very bad financial position, balance sheet wise. We're really going to see them struggle. When, for me at least, when you look at the option of stocks out there, it's very, very assuring to see a company like this, which is kind of stable. Again, a constant demand for the company, for the products, and then as well a really healthy balance sheet. And I wish I had a whole lot more to say about Unilever. It's one of those ones that, again, I just think you can buy and hold, and I don't think you got to put too much thought other than that, which is probably not a good thing to say. But really, very, very strong, diverse company. You're pulling in a really nice dividend. Dividend with this guy just shy of 4%. So pretty darn solid there, if you ask me. The company stock that we'd be looking at trades for $51 USD. Again, you will see the different tickers. You could really go with either of them. I typically go with UL because that's what I have on my watch list. But a very quick and easy one to wrap up our second stock with. Stock is down just shy of 20% off of its highs. I think it could be a really cool one to look into for our US stock for today's video. So those are my two picks for today's video, the Canadian and the US pick. I'd love to hear your thoughts on, I mean, first of all, the stock picks. Do you guys like them? Do you own these stocks? Are they ones that you're watching? I know they're not so common on YouTube, so I'd love to hear your opinion on that. Leave it down below. And as well, just the structure of today's video with a Canadian one and a US one. I'm all ears in terms of feedback. I kind of enjoyed doing this, kind of highlighting one or the other. I wish I didn't have to say this, but especially I know we got a lot of new investors to the channel, a lot of new investors in general. This is not investment advice direction on telling you to go out and buy these stocks. By no means a recommendation. They are simply a couple stocks to throw on your watch list, throw on your radar, and go do some more research for yourself. They very well could turn out to be good investments. Maybe they're not the right investments for you. And I mean, especially in a market like we're in now, you can't expect to buy these stocks and they just immediately go up. We look at these stocks with a long-term outlook. And when I say long-term, we're looking multiple years out. Usually the longer the better. That to me is the only reliable way to invest, especially during a tricky time like now. And we do just want to kind of pick and highlight some strong companies, companies that we believe have been through this and are going to get through this going forward. So that's what I believe these two stocks are, a Canadian and a US option. If you enjoyed the video in general, you can give this one a massive thumbs up because that is a really good way of supporting me and supporting my channel. I really do appreciate that. If you're completely new to the channel, we post videos. Well, maybe we'll post this video once a month going forward, but we do post videos every week. So you can subscribe for more content. And then of course, we do have our Investing Academy. If you're a beginner to the stock market and you're new to investing here in Canada, click the first link down below because we offer training programs. We'll take someone from scratch and we'll help them set up their accounts. We'll help you move over your mutual funds if that's what you have and develop a plan, develop a portfolio, and we'll guide you click by click through that entire process. That's our Investing Academy down below. But as always, I thank you guys for watching. I hope you enjoyed the new video and I'll see you in the